Welcome to another episode of the Investor Financing Podcast, and I'm your host, Bo Eckstein. And on today's episode, it's another flash from the past, and we're going to revisit a show we did about 2 years ago, maybe a year and a half ago, on unsecured business lines of credit. We walked through the different financing options out there for business funding, for real estate investors and business owners that are looking to maximize their ability to borrow money to buy businesses or, fund their real estate needs and transactions to supplement their asset-based lending such as fix and flip loans and bridge loans. So hope you enjoy this episode, and I'll see you on the flip side.
Welcome to the Investor Financing Podcast, where we interview real estate investors and lenders so you can learn all the secrets to getting your projects funded and scale your portfolio. And now, your host, Bo Eckstein.
Hey guys, thanks for coming out. This is Bo Eckstein with Thrive. And we're in for a good treat today. I put some notes together and some good slides on how to get unsecured business lines of credit for your investing business, because we're always trying to leverage. And you can't see Bill right now, but Bill is on, and he's going to help monitor if anybody has questions. So Bill is an internet marketing strategist and social media guy that I've worked with for, probably 8 years now. And he helps me put together PowerPoints and things I don't know how to do. And I don't know. He's basically MacGyver of internet marketing, if that helps.
Thanks.
So anyways, let's get started. We're going to go into the first slide, Bill, if you don't mind. Okay. I'm just going to give it, for people that don't know me, give a little bit of background. I founded Thrive about 3 years ago. Originally, it was just a meetup, but I wanted to create a real estate investor association locally. And so I love the name Thrive, and that's what we're all trying to do, is to create income and passive income so we can work the way we want to work when we want to work. Also have been a real estate broker, actually in the business of real estate sales and mortgage lending for 20 years now. And I founded a company called Emerge Lending Group, which we do a lot of hard money lending and business loans. And yes, I am a paid actor, actually, because of Bill's help. He taught me about social media marketing. I actually got casted for an HGTV show called Flip It to Win It. And that was quite an experience. I was on 2013, 14, and 15, I believe. We did 12 episodes. And then I was doing a lot of flipping in the Bay Area. And then I got into investing out of state, buying cheap houses in the Midwest. And now I'm progressing into getting into real estate syndication and buying multifamily properties. And kind of being in the money business, I've always wanted to learn different strategies to kind of leverage, right? Leverage in a good way. So I started studying into business lines of credit and what's available out there. So I figured I get asked all the time because of my hard money background, is there anything unsecured that we can get, and what options are available for term loans and things like that. So that's why I decided to do this webinar. And I've also created a lot of partnerships with different funding institutions that can fund our deals for us. Both hard money out of state and also unsecured lines of credit.
You're listening to the Investor Financing Podcast. We'll be right back after this break.
And now a word from our sponsors. Want to save money on your taxes? Cost segregation is a strategic tax planning concept that saves money by deferring federal and state taxes through accelerated depreciation. Get a free benefit analysis today. Please visit costseghub.com for more information on cost segregation and all of our cost recovery services that can put more cash flow in your pocket.
So anyways, let's move on to the next slide. So in this presentation, we're going to cover all about unsecured lines of credit, how to get them, what you need to qualify and apply. And then we'll also cover term loans, and then we're going to cover different strategies to put them together with hard money loans, so you can finance these together and create a major leveraging stream for yourself, so you can maximize your investment strategy, which we're all trying to do. So we can move on to the next slide. So basically, when you see a lot of these advertisements out there, people talk about unsecured lines of credit for your business. Typically, what people are talking about is in terminology, we call it credit card stacking. And basically, what these third-party companies do is they go out and they know how to apply to several different credit card companies. They know the ones that offer 12 to 21 months of interest-free credit. So what they do is they complete the application and apply for you, and then you're able to get these lines of credit, which are really essentially credit card advances. And these are interest only for the first 12 to 21 months. And typically you can get up to about $175,000. Most people I see in the range of $75,000 to $100,000 to get started. And during that period, it's interest only. There's no prepayment penalties. You can go to the next slide, Bill. So here's how to qualify for this program. Essentially, credit score of 680 or higher. And then your credit card, this is personal credit scores, by the way. And your credit utilization should be under 50%. Actually, it should be about 30%. So if you have a $10,000 credit card, you should be at, you shouldn't owe more than $3,000, because it gets a little bit trickier to get these lines of credit. And also, 680 FICO is kind of the starting point, but there are ways to get them if you're in the realm of 630 to 650, even if it's a little bit under 680. We have products for that as well. So that's basically it. So the process for these is very simple. You basically go to Credit Check Total, you download, you pull your credit report, a 3-bureau credit report, you save it as a PDF, and then you apply. You need basically your driver's license and your credit report, and it's like a one-page quick application. You don't have to provide any income documentation or anything like that. So I actually did this program, a similar program, and I got, I think, right around 50,000. And depending on what your highest credit card limit is, you can typically get 5 to 10 times that in credit. So at the time, I didn't have that many high credit cards, and so I was able to get 50K. And so I got that all essentially interest only. You're able to get it as cash. There's techniques to do that, and then use that cash, and then the idea is to pay it down, and then you go phase 2 and you raise more credit. But if you have a pretty high credit balance right now, like if you have a car that's $30,000 or $40,000 or $20,000, you should be able to get 5 to 10 times that in this unsecured line of credit, or basically credit card stacking. So this is a good place to start if you're looking. A lot of us are doing out-of-state investing, and we've got a couple projects going, and you want some additional cash. This is like the easiest way to do it. It takes about 2 weeks. And if for some reason your credit scores are a little bit low and your utilization is a little bit high, actually we have a program where they'll basically fund enough to pay down your credit cards, which will enable you to then qualify for this program. So that's available too. So that's why you can have a 630 credit score. And so basically, after you submit your application, which should take you about, it should take you about, it takes about 5 minutes to apply. Essentially, once you pull your credit check total, then you can upload and we'll give you a pre-approval letter essentially within about 3 hours, and so you'll know what the range is. They'll say you're approved for between $60,000 to $90,000, and then 90% of the time that's where they're going to come in as far as what you're going to be able to qualify for. And then what I'll do too is I'm going to kind of wait till the end to do questions. But Ryan asked a good question in regards to will this impact my credit? Because obviously you're going to raise you're applying for credit, and you're raising you're getting inquiries, and then you're leveraging your utilization rate. So yes, there's ways to work with that though, Ryan. So I look at it like there's a lot of strategy to credit cards and to credit lines and to term loans and things like that. And so one of the strategies is that and Ryan, maybe a term loan's good for you, and so we'll talk about that a little bit later. But you guys can keep firing questions in the chat, and then we'll address them as we go. Or if it fits in a certain spot in this presentation, we'll definitely do that. But there's definitely strategies to doing that. And at the end of this presentation, what I do is I'll go kind of like full circle with everything, and I'll kind of give you the overall strategy that I think is the best as far as getting the money to fund your deals. And there's a ton of capital out there with hard money lending and all these different term loans and unsecured lines of credit and things like that, and self-directed IRA. So overall, I think the strategy is to know what's out there and figure out what is good for you, what's a good fit, what's not a good fit. And so we'll dive deep into it, and then we can definitely, if you want, set up a call after this if you have individual questions, and I'll get those answered as well. But we'll have a Q&A. We'll have a Q&A after that as well. So Bill, if you don't mind going to the next slide. So kind of going back over this process, let me just move this here. Excuse me. Basically, complete an application, you create a password and log in, and you can track the process. You go to credit check total. Before you go to credit check total, talk to me first, because different vendors have different requirements, but most of them like credit check total. You sign up for the credit monitoring. You must keep that until the process is done, because the vendor goes on and has to check certain things. And then depending on the type of credit request, if it's business credit, there's a different application process. I'm just talking about, hey, I need money now, and how's the fastest way to get it? And the fastest way is I have a 680 credit score or higher, and I have had less than 4 inquiries in the last 12 months. And then this process can take 2 to 3 weeks or shorter. And then also we need a copy of your driver's license. And then let's go ahead and move to the next slide, Bill. So back again, 2-week process typically. And now if we're using this other program where we have to pay down some credit cards, so we have what's actually basically like a small loan and a big loan. That's going to take up to 6 weeks if you're not quite ready for the just to go straight into it. And so that's essentially the part of it. And they're one of the few that out there. I've got 2 vendors that offer this product where they'll actually pay down to get your utilization correct. That's a tongue twister. Okay, Bill, next slide, please. So how will I know if I've been approved? Essentially, you're going to get a pre-approval letter with your credit limit range, and that could be anywhere from as low as $25,000 to as high as $150,000. But they usually give you a range. Usually, it's like a 20% variance, and so that's typically how it is. And you'll get it back within. You get the pre-approval back typically within 2 or 3 hours, if not sooner. And it's a pretty quick process. If it's after hours, it may take a little bit longer, but this is during business hours. And your pre-approval, like if you're not quite ready, they'll actually they'll give you a conditional pre-approval, and which in time they might suggest the third-party pay down to get you in line to get the credit funding. Okay, now we're going to talk about a term loan. So these term loans too, this is pretty simple process. Anyways, these term loans can be anywhere from $25,000 to $300,000. They're 5 to 7 year terms, and interest rates vary from 5 to 15%. And that's going to be on a couple different factors. And so I would probably say you're going to be probably in the double digits more realistically, unless you're like ultra solid. And then once you get your pre-approval, you're going to find out exactly what your interest rate is going to be. And I wanted to give you something else here. Sorry, I hit it up. Nope. So for this program, same thing. You need a 680 plus credit score, all three bureaus. And on this program too, actually on all these programs, you can have co-signers. So sometimes maybe you're not there. You can definitely have a co-signer. So for this term loan product I'm talking about, whether you do have to provide income on this. So if you're W-2, you need your W-2s for the past 2 years. If you're self-employed and your income, you'll need your 1040s. And you just need to show not a loss in your tax returns. So if you make $40,000 or more, you can qualify, and then they're going to look at your high credit balance, just like the ULOC, the unsecured line of credit we just talked about. So they'll look at that. And these programs, you can get money in your account within 7 days, and that's all just that's all like a lump sum wired into your account. And then so that's pretty much the qualifications. Those on those programs. Those are super easy. It's pretty cut and dry whether you qualify or not. And also a lot of people that I've talked to and have seen their credit reports, they have over 4 inquiries. That's no problem. We have vendors that can remove inquiries within 2 weeks. So a lot of these things you can get around. If your credit score is not close to 680 right now, I can refer you to credit repair companies that basically, you pay $50-$60 a month and they write letters for you and dispute things. Actually, after the downturn in 2007, I had to use credit repair, and it actually works really well. And they removed everything negative on my credit report. I mean, it's not going to happen overnight, but they can remove pretty much anything these days off your credit report. So there are ways to workarounds to get around these things. And also, if you have a partner in your business, there's some strategic plans you guys can do where you apply for both. One person applies for one thing, one person applies for the other program. And also, you can apply for a term loan and a ULOC or unsecured line of credit at the same time. So that's pretty cool too. So you can double up your funding. So there's a lot of ways to get lots of funding. I also have another vendor, and they offer business credit cards. So business credit cards, although they pull your personal credit, you get this unsecured line of credit, basically credit card stacking, but they're just in the business name. So that means it's not going to report on your credit report. So that being said, when you take the cash advance, it's not going to show and bring down your scores like it would on the other program, right? So because that's something strategically you have to know when you're going to get all this new credit on your personal credit report. It is going to impact your score, so you have to know. But a lot of times, what we do is if we start with the easy program, we'll just call it the easy unsecured line of credit. Once you get those, then what we do is we transfer those cards into a business name, and then we remove them off your personal credit. So there's a lot of strategy to all this, and then we're also going to talk a little bit about actually how how to build in your company's name, right? Like you have an LLC or corporation, right? There's strategic plans to actually get to start from nothing. So I just go out and set up an entity and to actually build business credit, right? Because that's just another strategy. So like we got to take all these strategies together and you work them all at once, and then you create, a full funding package. It's kind of like kind of the vision I saw for myself, because one is you need a hard money lender, right? Two is you need a bunch of capital available. You need Home Depot credit lines and things like that. And then three is you need private lenders to put up your gap funding, because you're going to run out of cash, right? You don't want to use what cash you do have. You need to save that for rainy days. And then we got to talk about self-directed IRAs. The whole plan here is to create a funding suite, right? Like, so you have the availability. And there's also, we're going to touch on it a little bit, there's also great equipment leasing programs, right? Like, so if you're actually day-to-day grinding away, flipping locally or flipping anywhere, and you need to buy a work truck or things like that, you can get equipment leases just in your business name. So we're going to dive into that a little bit further. Let's go to the next slide, Bill. Equipment leasing. So what's great about these equipment leasing programs is that you do them strictly in your business. So you can actually get leases for your work trucks. You can get leases for equipment if you're running your own. A lot of developers now and contractors that I work with in the lending business, they're in need of always, like, getting equipment, and obviously we don't want to get the equipment in our personal name. So we can offer equipment leasing for different operational, it could be for your computer systems. I mean, the sky's the limit as far as what's available for leasing. And so typically it's the same thing, right? You got to have good personal credit, because they will look at your credit, although these leases won't show up on your personal credit report. So pretty much any product you're looking for, you can lease. And so if you have any questions on any of the leasing product, we have different vendors that specialize in different leasing products. Like some specialize in trucks, some specialize in software or computers. So that's available too. So if you're in need of that, feel free to reach out. I'll put you in contact with the right people. And you can move on to the next slide, Bill. Now we're going to talk about business credit, like real business credit. So I'll give you a little bit of background on this. I mean, essentially, this is where you actually have an entity, an LLC or corporation, and that business, that entity, stands on its own two legs, right? You have a EIN number. It's just like the Social Security number for us as an individual. And so that EIN number actually is linked to business credit reports. Experian, Equifax, and D&B or Dun and Bradstreet. Okay, these are credit reports that report your business credit. So your business actually develops its own credit score, just like we do. So if you pay on time, you get great credit in your business, and that's the key. So there's a whole funding formula to being able to establish this business credit, right? So in the beginning, obviously, you're not going to go out if you don't have okay, we're talking like you're starting from nothing and your business has no income right now. So the key is what we do is you line up your business in the correct manner, meaning it's got to be a real business, right? They have, just like the personal credit, they have their checks and balances and their systems. And so the goal is to actually set up a real business. So, you gotta be doing something legitimately. So let's say most of us are in real estate investing, right? So actually real estate investing is a little tougher because it's scrutinized a little bit more, but it works like a charm. So let me take a quick drink here. So the first thing is that you get, you have your entity, you have an actual business phone number, you have a business address, you have a business website. There's about like 10 action items to set your business up legitimately. then once that's up and running, then you go and get vendor trade lines. So the first thing you do is you go to, I have a list of these different vendors that you start with. And so you start with the vendors, and you get signed up with them to get vendor credit. They could be WEX gas cards, and it could be different vendors that you could use their product. Like there's all different. There's a whole list of them, but essentially you get set up. You use your gas card. You're usually on net 30, which means you got to pay it back within 30 days. And then after you do round one, you try to get 3 or 4 or 5 of these type trade lines, and there's a list of them and just a process. So let's go back and just say, phase 1 is to set up your business the right way, right? You got to get it so it's a professional business, and there's different techniques to doing that and strategies and things. But anyways, once that's up and running, then you get these trade line accounts, and then you get them seasoned, so you pay them on time for a month or 2. And you want to get, typically you try to get around 4 to 5 of these on going at once. And then there's phase 2, and phase 2 is that you actually then go to store and you get store cards, like you get Home Depot cards. And granted, these are not going to be reporting on your credit report, and there's no personal guarantees. It's purely your business the business is responsible for this debt. So then you go into stores like Home Depot and you get business credit cards with them. Okay. And then you get like another 4 to 5 of these type business credit cards, Home Depot, Office Max, things like that. So once you do that, then the next phase is you can actually get business credit cards and lines of credit that are not personally guaranteed. And that would be the third phase. And then, so at that point, you have 10 trade lines. Your business credit, actually, the scores need to be 75 to 80, which is a PAYDEX score, which is considered good. Keep paying on time, and then you develop over time. Sorry, I got distracted. I was looking at the comment. And so that's third phase, right? Is then you get these store credits. And then fourth phase is that now you go in, and there's some banks that will actually give you unsecured lines of credit and such. So, and then you can also get credit cards that allow for you, to take these cash advances with interest only, or interest free for, a certain amount of period of time. And then there's a strategy then to move the balances from your personal credit then to these business accounts. So there's a couple ways of doing that. Sorry, I got to turn my phone off. So that's basically, we can go more in depth, but this kind of meeting, this online meeting we're having right now, it's just kind of like a high level look at like the different strategies out there and like what's available. So Bill, if you don't mind going to the next slide, please. And now we're going into personal versus business loans. I think I've kind of tied on this, but let's just go over it again. Business credit is tied to your EIN number, not your social security number. New companies are okay. Must have business name, EIN, address, telephone number, and website, and a couple other things. Business credit score is based on entity only. Again, we've talked about that. And yes, you can start this process literally in a week. Essentially once everything's set up, you can get this going, and then you set up these vendor accounts in the beginning, and establish these accounts, these gas cards and such, and that's the start of building your business credit. Now, it's completely different if you have an existing business with revenue, okay, and you've got solid tax returns. We can get you, legitimate lines of credit. A lot of people don't have these, don't have income coming in, or they're showing losses on a lot of real estate investors show losses on their returns, but some of us do have solid financials, and you can get up to $500,000 lines now. There's a lot of capital out there, so everything is dependent on where you're at right now, right? You got to start someplace, right? After the downturn in 2007, I had the worst credit, and I had foreclosures on my credit report, and it was painful. But I always study and I always learn what we can do to leverage in a good way. Right now, I'm not going to go and get $100,000 in credit cards or lines of credit and then go buy a new car with it or whatever. Go waste the money, right? I'm using it for my business. I'm using it to be able to take advantage of opportunities when they come my way, and to leave my cash reserves in my bank. A lot of times people take all their cash and they put it in a deal, and that's not the way to do. I mean, I have one deal right now. I got $100,000 in it, and it was supposed to be a 6-month deal, and it's been a lot longer, let me tell you. So you have to plan for these rainy days, because rainy days come, and we can be the smartest investors out there. But the key is OPM, other people's money, and that's kind of why I wanted to do this presentation. That's why in my business model as a hard money lender, I knew I had to incorporate different strategies for my clients, because they're always calling me and asking me, can you do this? They're always trying to leverage as much as they can. That's our job, right? To leverage, because we want to buy more properties, and we've got a couple going on at one time. So the key is how do we do it, and what's the strategic plan going forward to be successful at this without getting ourselves in trouble. Would you do the next slide, please? So the other thing is what I've done, because a lot of my past clients in the hard money space, right, where a lot of us are starting to go out of state, and what works in California may not work in other states. Like, I get people calling and they're buying properties for $75,000, and they want to put in $25,000. It's worth $175,000, and they want to keep it as a rental. I wanted to come up with solutions to everybody, right, as much as I can, because I know, because I'm doing the same thing they are in those other states, right? I'm trying to figure out, how do I leverage? How do I get in these other states? I mean, what I can tell you right now is that if you're looking at other states, if you're doing very low end stuff, like you're buying stuff for $20,000 or $30,000, hard money loans are not going to work for you per se with the big boy hard money companies. So that is a different strategy. That's what I call the self-directed strategy, where you build a financial friend network, which we're going to talk about a little bit further down this road. But if you're looking at other markets and you're looking to leverage, typically I'm going to give you some rules of thumbs. I mean, rates are not going to be as aggressive in other states, because loan amounts are smaller, and people quite honestly like to lend in the coastal markets as opposed to the Midwest. I mean, there's just a lot more capital, a lot more money here, so it just makes more sense for them. So rates will not be as good as they are for an experienced flipper here in California versus in the Midwest and in different markets. But rates are anywhere from 9 to 11.99%. This credit monitor sign up is not, that was a mistake. You can just delete that out of there. And so these programs, typically they want the asset to be worth at least $75,000. Like your at the as-is value of our property needs to be about $75,000. I have capabilities of pretty much lending in every state now, and basically the process is you call me and run the scenario by it. I'm gonna source it to the best funding possible. Most of the funds don't like for example, it's harder to fund something that you're buying for say $75,000 or whatever, and the rehab budget is like $100,000, right? Because it's more risk on the lender. So they want to see more of a threshold. Let's say it's a $100,000 property. They typically want the rehab budget and stuff to be 30 to 40% max. So you want to see a $40,000 rehab budget. Not to say we can't do like a $88,000 purchase and a $200,000 rehab budget, because you can. It's just there's less lenders and the LTVs get a little bit cut. So on those deals, run them by me and let me kind of be creative with it, and I can tell you what's available for you and find the best deal for you. But that's why I do like the multiple prong approach and having financial friends and also hard money people in your pocket, and then having these lines of credit. It's the best of all worlds, being able to leverage as much as you can in different ways. You can hit the next slide. Okay, so we're just going to recap real quick, just to reiterate. Typically, you need a 680 credit score, although we can pay down some of your credit cards, and we can do that with people that have 620 to 650 credit scores. No more than 4 inquiries in the past 4 months. Actually, I think that's more like 6 to 12 months. When we give you the pre-approval, let's say your utilization is high, we'll actually tell you exactly what to pay down if you want to pay out of pocket, or we can pay it down with our third-party program. Client provides a copy of credit report. Typically, it's going to be from Credit Check Total. But before you do that, I always suggest just have a call with me, and then we can just I can figure out which vendor would be the best vendor to go with, and then we can make sure we got the right credit report for them. And then their approval process is very fast, as we spoke about. You can just go to the next slide. So now let's get into kind of the good stuff. The overall strategy on funding real estate investments, and kind of like, let's look at the big picture. So we talked about business line of credits, term loans. You can partner those together with hard money loans. You got your financial friend network, guys. This is especially doing a lot of out-of-state stuff. It's easy for me when I'm buying stuff in another market. Like I might be buying a house for 30 grand and I need 15 for rehab. I go ahead and I borrow that from somebody's IRA, right? Because they know me, they like me, and they trust me. It can't be your father. There's certain rules with self-directed IRAs. We've had presentations in the past on that, but I'll bring back another person on self-directed IRAs. Once you get enough rentals going, you look at doing portfolio loans, which you can remove. Let's say you had 6 or 7 rentals on your personal credit. You can actually get those removed off by doing a portfolio loan. So depending on where those assets are, we do have lenders that do portfolio loans. Move those off your credit report, then you can rebuy and get traditional bank loans. So there's a lot of strategy to all this. You can also do real estate syndication for your bigger deals, right? You can use other people's money. A lot of these apartment syndicators, they're going out, right? They're not putting any of their own money in it, but they're putting their intellectual capital in it, right? They're finding the deal, they're underwriting the deal, and then they're raising the capital or the down payment, and they're getting a bank financing for the acquisition, but they're raising usually 20% or 25% for the down payment, and also any funds needed for renovations and contingency reserves. Then there's self-directed IRAs. So one of my strategies was when I first learned about IRAs, I'm like, wow, I didn't know you could self-direct, right? And now I've kind of studied it, learned it, and I keep on learning from all these custodians, like what you can and can't do. But the amount of people, like going to meetups and things, and I mean, if you've ever been to one of my meetups, you know, like a lot of people in the audience have lent me money, right? Because they trust me, they know I'm going to pay them back, right? And I make sure that they're putting the liens on the property correctly. So it's a great additional support, right? Because you can get a hard money loan first, and you can get what we call gap funding from somebody's IRA, or if it's a small purchase, a lot of people have, buying out of state, a lot of people have, maybe 50 or 60,000 versus having 200,000 or 300,000 in their retirement accounts, where it's easier for them to say, oh, I can lend this small amount versus lending all my money on one project. So you guys got to learn the self-directed market if you haven't. There's also 401k rollover program. So you can actually if you're starting a real estate investing business and let's say you had a 401k, you can actually roll that money into the startup of your business. It's completely legit. And I have vendors that actually do that for you too. So I never knew that up until recently that you're able to do that. So there's a lot. And it blows my mind that so many people don't know they can self-direct their retirement. And granted, if you're still working at the company, you may not be able to roll into a self-directed. So you got to get the custodian, like an AccuPlan or IRA Trust Services or Quest IRA, talk to their internal people and run by your scenario for them. There's different types of if you're self-employed, you can do a solo 401k, self-directed. There's a lot of different strategies when it comes to self-directed. I'm a huge fan of it. I typically borrow from people's IRAs. That's kind of like, what I'm looking for. And I just borrowed and closed on a deal that I just borrowed money for on an IRA instead of having to jump through hoops. It was, a financial friend's IRA. So, the capital's there and you build that up over time. You can't typically go out and just raise $1 million without having the credibility to, although people are able to do that. But I think you need to be able to show a track record and show credibility, and then it gets easier to raise capital. And so, putting this all together, I guess it really stems to what is your strategy right now? What are you looking to do? And I always like to have credit available for me and to have it ready, because there's going to be another rainy day, and we want to be able to jump on opportunities when others are not able to. I personally think when there's a little bit of a slowdown, you're going to see a lot of house flippers that are in over their heads that are getting foreclosed on by these hard money lenders. So I see that as a huge opportunity that's going to be coming in the next 12 to 18 months, to buy broken projects and to, find these stalled projects and to capitalize on them. So you're going to need the availability of funds, because at some point, hard money lenders aren't going to be as aggressive as they are right now. They're super aggressive right now, and they've got to pull back, and it's only a matter of time before they do, in my opinion. Do we have one other slide after that, Bill? Okay. Hey, now we're going to kind of go into Q&A. I know I kind of went fast, but I've been on 3 webinars. Somebody's. Are we muted? Okay, cool. All right. I think you were not muted. Okay. Okay, I'm going to start. James asked, if your LLC business is brand new, do you look at your personal income? So we have James, we have programs that are just based on your personal credit score right now, and they're for startups. And we also can get those business credit cards without showing an income in your business name. But to get the most credit in the beginning, if you have a 680 or higher credit score, or have a 620 to 650, and we're able to pay down some of those credit scores right now, we can get you up, and then we can do it without a track record. So the answer is yes, we can fund you, assuming your credit's good, or find a credit partner or business partner that's got good credit. Is it absolutely required to have an LLC, or could one get away with a sole proprietorship if one has excellent personal credit? So yes, so you can get personal. This program is going to report. The first program I talked about is going to report to your credit report. So the key is like one of Ryan's concern is that he asked earlier was, is it going to affect my credit score? Yes. I mean, you're basically getting, let's say you get $100,000 of credit and you pull out $80,000. Your utilization is 80%. It's going to affect your credit. So you have to have a plan of converting that into business credit, right? So you take that and then you do a balance transfer into a business credit card. So be aware that you have to have the ability to repay it. If you go out and charge a bunch of stuff that's not helping your business, you're just basically digging yourself into a hole. You have to be responsible, guys. But yes, the answer is yes. You don't need a business. There's options out there for you. There's also programs I should have mentioned based on your revenue. If you have a business, any business, not just real estate, and you're depositing a lot of money in your bank account, there's revenue programs that will give you a certain percentage of what's deposited into your bank account. So there's revenue programs too. Well, we didn't even touch on that. So there's all different. Also, so I can give examples of vendor trade lines where you're going to start. I can. I also have a program that walks you through it, step-by-step videos. I can share that with you as well after this event. Is DMB file required as well? Not seeking the max here, just around 50 to 75K. If we're just doing personal, I'm going to call it personal lines of credit, or we call it ULOC in the business. You can just do it in your name, and I'm just, just be aware that you have to have the ability to repay it somehow. I don't want you to go out and get all this credit. If you're using it for good, then it will work. So yes, you can definitely get these lines of credit. The first round I did it in my name, and yes, my credit scores went down a little bit, but I knew what was coming, and I had a strategy for it. And so I'm going phase 2 now. In phase 2, I'll get even more credit, and then I'm building my business credit too at the same time. I'm getting better trade accounts, and I'm building my financial friend network. That's kind of like the full circle, right? And then you have all your funding sources for your hard money lender, so you're ready to go. And I'm going to actually do a whole nother online event for that, because when you're applying for a hard money loan, depending if you have an experience, I'm speaking of, like, I have a little spreadsheet, right? Like, I want to make you guys so it's like easy for you guys to get these loans, and you're not like having to recreate the wheel. I'm going to give you some templates, which you can populate. Like, one is a deal experience verification, right? Like, if you're an active flipper or buy and hold person, just have this Excel spreadsheet filled out, because every hard money lender is going to want it, right? I have programs right now that will go 90% of purchase, but they want experienced deals. They want your deal verification. If you've done 10 deals in the last 2 years and you got over 680 credit score, I'm going to get you 90%. Okay, so that's super high leverage. But you guys got to be ready. You guys can't piecemeal things. I'm going to just show you how to just do it in a way that it's just easy and things are done, and how you should deliver your hard money loan file to the lender, because it'll make the job way easier. Some of you are really good that I've worked with. Some of you are just so unorganized. And granted, I am super unorganized. That's why I have an assistant, because I would never do it either. But I'm just telling you the right way to do it. Okay, so you don't need an LLC to get credit, to get a ULOC. So I think eventually you should. But anyways, speak to the right. I'm not a CPA, a tax person. I'm not an attorney. Cover my butt, right? But entities, there's a lot of advantages to an S corp and things. So you need a good tax strategist, depending on what you're doing. Everybody should know what's out there and know how to save money in taxes and educate themselves. And yeah, Kelly, I will give you those vendor information as long as I get a ride in your boat. Let's keep on going down here. Feel free to keep on asking questions in the chat. We'll answer as many as we can. Can you roll a Roth IRA into a self-directed IRA? Yeah, you roll into a self-directed Roth. And that's totally cool. I can give you a list of custodians that you can talk to and figure out their fees and how they work. You can do a checkbook control. There's a lot of different options. So talk to an expert in that field. And then, no, there's no annual fees. They do charge typically around 10%. So if they get you $100,000, they charge you $10,000. It's expensive. I paid for it when I did mine, but I wanted it done because, like I said, in 2007, I was an idiot real estate investor, and now I educated myself in real estate investing. So it's not going to happen. I was speculating big way, owned way too many houses, and I completely totaled my credit. So I wanted to kind of fast track the credit process. So as I was building my business credit in my business name and not using any personal guarantees as I'm doing right now, I also used this approach. And then I'm rolling these credit cards into business credit cards right now. So they're not on my credit report. Scores go back up to 750. And you go from there and keep building more and more trade lines. And essentially I want a couple $100,000 available credit. So when I see something I want, I can jump on it at all times, including, and at the same time, you're going and you're networking and you're building your financial friend network, right? And like a lot of, at the last event we did an out-of-state meetup, and we talked about the IRA model where there's so many different ways you can structure deals. Anyways, I'm not going to get into it right now because we could talk like 2 hours just on that. So it's not a service like Fund and Grow where you pay an annual vendor fee. I do have Excel spreadsheet for your deal verification. And if you haven't done deals, that's fine. If you haven't done your first flip, I can, I'll help you package your loan request and just get you ready. So, you put yourself in the best light possible. And you're not going to get as high of leverage on hard money loans if you're not experienced. Excuse me. But there's a lot of, you're still going to get 80% of purchase and 100% of rehab, maybe 85% of purchase. So there's still great leverage. How many deals are required for a hard money loan? I have 2 buy and holds. So yeah, depending where you're buying, if they're smaller deals, 12% is for a $40,000 loan in the Midwest is not, that's kind of typical. I've seen 14, 15, 16% on these small loans. But I think kind of going back to it, it's like financial friend network, right? Like you constantly be networking with people, sharing with people. There's a model, I'll just go into it for a second. We call it the catalyst model, right? I'm the catalyst that's finding the deal in the Midwest. And I can either go and get a self-directed IRA to put a first lien on just like a bank would, or I could also do a different model, which I don't like as much, but it's also a win-win for the IRA person. So depending on the structure, so basically what happens is you buy a house, let's say you're buying a house for 30 and it needs 10,000 in work, and then you want 5,000 reserve. You're the catalyst, found the deal, you're going to manage the construction, you're going to oversee the management of the property or whatever you're going to do. This other is the money partner. The money partner puts up the $45,000, okay, puts a lien on the property but doesn't charge interest, but instead what happens is they have a lien, so when the property sells, they get paid back their original capital. So then each month, let's say it's $1,000 rent, the catalyst gets $500 and the other person gets $500. That $100,000 property, let's say you built in equity, is now worth $150,000, and it goes up to $200,000 because of appreciation over time. So basically, it's a rent split, and at the end of the day, they get back their initial $45,000, and then let's say it's a $100,000 sale. That would be split 50-50, right? So that's the catalyst model, which also works well. So there's tons of models for doing these kind of Midwest properties. You just got to set the right expectations. One of the problems I ran into was I wasn't going there, and it's hard to manage construction far away when you're doing huge renovations. So what I learned now is that what I had to think about is a lot of these small ones, yes, you can buy these small ones, but it's going to take a lot of doors to get the cash flow you want. So are you better off doing a larger property and doing less, but doing like a 50 unit apartment or a 60 unit apartment? So that's kind of my thinking now is okay, after having friends that are really good syndicators, they own about 5,000 units. And, one of them just sold, and his take on that deal was over $2 million. I go, well, maybe I'm doing maybe I can get to the next step. And so that, in my mind, that's where I want to go next, is real estate syndication and buying multifamily property. But you got to educate yourself. And that's why we started the multifamily deal analysis group. And you can join that on Facebook. And Ryan's going to do the first case study. And he's super analytical. So it's going to be awesome. Thank you, Ryan, for doing that. He's also helping with the out-of-state event, which we do live. But I think we'll also move that online too, because a lot of people on the call aren't able to make lunchtime events, so they can easily tap into the Zoom meeting, and then we can also record these and save them. So it's a good way to actually learn and interact on these Zoom calls. This one obviously is in like a webinar format, so we're only doing Q&A. Okay. Okay, here's a question. If one is doing flips, is it the holding company that you want to build business credit for rather than the LLC that buys and sells the flip? It depends. I mean, I guess your LLC is going to be an S corp, and it's going to be passed through. So your holding company might be the company that's, if your actual holding company is making money, then you can go out and you can bypass a lot of these steps we were talking about earlier. So I think that might be a good strategy. Then your holding company is the one you want to start building the business credit with. If I'm understanding the question correctly, I think I would do that way. I mean, there's a lot of hacks out there. One of the things I did to kind of supercharge building my business credit, when I bought a car, I bought it I bought it in my name, and I also bought it in my company name. So we both owned it. So then it then I would report to the my business credit bureaus as well. So it's on my personal credit, unfortunately, but it's also on my business credit. So there's strategic things like you can do like that, or you can just buy it in the name of your business. Find out where they're reporting to, which reporting agencies. Some of them only report to D&B. Some of them report to Equifax, and some of them just report to Experian. So you're going to kind of learn as you go. There's different groups that are geared for building business credit, so you can learn these techniques. I mean, I just look at it guys, we're in the business of money, right? We always need cash flow. We always need money. So as many avenues we can get to build money. I mean, I think that's pretty critical. And then let's see. Ryan asked, but what do you mean by rolling your 401k into your business? Can you explain? Yeah, depending. You can actually take your 401k. Obviously, you can't be working at that company, but you're not anymore, I don't believe. So you can there's a process of actually rolling that into a business. So you can actually roll that into your business that you're starting, and there's no tax consequences. I'll get you the details to that program. I don't know 100%. I'm not an expert in that by any means, but I have the vendors that will handle that for you and answer all your questions. So that's what I kind of do. Naturally I'm a connector by just being in real estate for the last 20 years. And I've been a mortgage broker, a real estate broker, hard money. So I build connections, always finding what's available for us as investors, right? So I'll definitely pass on that information because that's huge, right? Let's say you had $200,000 or $300,000 in a 401k that's in the stock market. Now you're able to roll that into a business, into your real estate business without paying tax, without taxable consequences. Yes, that's huge. So yes, I'll definitely share that with you. Can you roll a Roth IRA into a self-directed IRA? Yes. Remember, I'm not a attorney or accountant or anything, but I will put you in contact with the right people to ask all your IRA questions and your 401k rollovers. Kelly says, sounds like the best thing to do is come talk to you. We have equity, but don't want to tap all of it, right? Yeah, I mean, exactly. You guys want to be, you want to be in a position, you want to kind of think things through, right? Strategically, your life, right? Now that I turned 40, I'm okay, I got to strategically think what I want to do. And going forward, how to fund my deals and have the right people around me to make the right decisions. And not everybody's going to be geared for a credit card stacking program. Not everybody's going to be geared for a term loan. Not everybody's going to be geared. So basically, we're going to teach everybody, share what's out there, and then figure out if any of this makes sense for you right now, or maybe in the future it does, right? And just knowing your options, right? Because the worst feeling in the world is when you put your money and it's trapped in a deal, which was supposed to be 6 months and ends up being a year and a half, right? Because that's going to just slow you down, and you never want to get stuck. So I'm trying to help people not get stuck. I've been stuck many times. And just so you know, guys, we anything that we film, we're posting on the Thrive website. So I'm trying to get away from Meetup because Meetup, they don't want me to post my online events there because Meetup's for real meetups. I'm still going to use Meetup, but I'm just saying, go to thrivereia.com and our calendar is going to be there, and we're going to keep building it. And there's 16 or 17 archived videos. Kelly, you had asked about the Jacksonville meetup we did with, or the online webinar we did with my buddy out of Florida. That's going to be there in the next couple of days. We're just about to upload that up there, so you can watch the old, when we hosted REI bar camps. You can watch those. I mean, we're going to make that the place to go. And then, guys, we have a real estate investing club, Facebook. I think it's Facebook.com/real estate investing club. I'll send links to that. That's our big group. It's not as interactive as I'd like yet, but it's a good group just to see what's going on. I've tried to post in there. And then we just did a spinoff the other day, and that group's called Multifamily Deal Analysis. And that's actually going to be really interactive. And like when I was talking with Ryan earlier, actually I was talking and he was posting, he's actually going to go over his deal analyzer calculator. It's going to be online. He's going to share a screen just like this. He's going to walk you through his whole underwriting process, right? Because we all get analysis paralysis, right? We all get, but like when we had lunch today with a new investor that's gone through all this training and knows what he wants to do, but he hasn't taken the steps. It's because he hasn't like analyzed a deal. Once you analyze a deal and then you're like way more comfortable. Like me right now, I'm like, oh, this multifamily, it seems so overwhelming, but it's because I'm not analyzing deals on a regular basis. And it's very simple to get like an offer on a multifamily, get an offering memorandum and just plug in the numbers. And also in that group, my buddy Vinny, who's a big syndicator, was gracious enough to give us his actually deal analyzer. So all you have to do, I have the link on that multifamily group. If you haven't joined, opt into thrivereia.com, go to the meetup.com/thrivereia and get connected. So when I send out emails, you guys are getting those emails, and then join the Facebook groups. And I think we'll start another small group called Out of State, Thrive Out of State. And the plan there will be to interview local boots on the ground type people that are wholesalers, like we did with this with Gonzalo in Jacksonville. Whether that's a good fit for you or not, I'm not advocating going and buying lower end properties, but at least you're getting an overview of the market. You're seeing what people are doing. You're seeing what's available in other states. Gonzalo actually sent me a one-pager with property managers, all the vendors we need, so we can actually go in and start calling these vendors and checking what rents are. So what I'm trying to do is, with the help of many, is to create a platform like we can totally dive deep and share contacts and share knowledge, because that's the only way people grow. I mean, there's great sites out there. There's great podcasts I listen to in real estate. A lot of real estate investors that are 100%ers. I mean, they're like all about real estate investing. They dive into like information, right? They dive into it, and they're constantly learning. And because this is a never-ending learning process. I mean, I learn something new every day, and I'm always amazed at what's out there, and just like the money that's being made by some, and the rest are kind of sitting in the dark. So it's like, what actionable items can we do today to make us super successful tomorrow? And that's our goal. All of our goals are, right. And Mario Masamoto and I always talk about the flip-flop lifestyle, being able to get up and just wear flip-flops all day and not have to worry about shit. That's the goal for most of us out there, right? Whether you're self-employed or working a 9-to-5, I think all of us pretty much have the same basic wants, right? We want to be free, and we want to be able to do some traveling and things like that. And I think that's the way. Oh, Mario just said flip-flop lifestyle, baby. So Mario like agrees with that. I think we all want the same thing. So I'll continue to bring more information. I can bring some of my vendors that can talk in depth about business credit and building business credit and different techniques. I'll share with you my vendors that we can. If you guys want immediate funding, I can get you hooked up. To do that, we have a calendar on Thrive, thrivereia.com/calendar. You can definitely just book an appointment with me. I am going to Vegas, so maybe next week would be a little bit better. Tuesdays and Wednesdays, I think, are usually the best. And then, feel free to reach out. I like text messages. I don't always answer the phone because I'm usually on the phone, but I'm fast when it comes to texting. You guys can always text me, 925-852-8261. That's 925-852-8261. Get plugged in on the Facebook group. I haven't talked this much in a long time. I literally just was on an hour call, and I posted on my Facebook group with Greg McDaniel. He's a real estate agent, and he hosts a show called Real Estate Uncensored, and he does real estate prospecting. So I talked with their group about how to be an investor-friendly real estate agent. So that was fun because it's hard for us as investors to find real estate agents that are investor-friendly, and it's available. Oh, I forgot to mention. Yeah, I mean, there's definitely. That's good. And then, so there's definitely a lot out there for you guys. I just want to not keep you on the phone. I think people are dying off anyways. Thanks for coming out. Let's hang out. If you guys ever want to have lunch, let me know. I just require sushi, and we can talk for an hour. That's fine. I won't order the expensive rolls either. And anyways, you guys have a great night. I'm going to go eat some food and then catch a flight to Vegas. I'll be there till Monday night, coming back Tuesday. But I always have my phone on me. Thank you very much, guys.
Thanks for listening to the Investor Financing Podcast. For show notes and useful resources, please visit investorfinancingpodcast.com. For questions or comments, email info@investorfinancingpodcast.com. If you enjoy our show, please share it with your network. Until next time.